I was telling my clients for the first time not to buy gold. And gold was around 3,200, 3,300. And I said, look, I'm a gold bull. I love gold, but these gold stocks are so cheap that it doesn't make any sense to buy gold above ground.
Well, it's very realistic. I mean, especially if you have $10,000 gold, $200 silver, what is that, 50 to 1? Potentially silver could go higher than that.
I told my clients for the first time not to buy gold when it was worth about $300 to $300. And I told them, look, I believe in gold. I adore gold. But these gold stocks are so cheap that it doesn't make sense to acquire gold above ground. Well, that is extremely real. I mean, what is it, 50 to 1? If you had $10,000 in gold and $200 in silver, silver may perhaps go higher than that, which would mean that silver would double to 100. I believe that move will happen soon. It might happen in a few months. They did it wrong. There aren't many jobs available. Inflation is high, and I think that's actually what's making gold go up and the dollar go down right now. No one is paying attention to this bull market. There is still one group of folks who are obsessed with Bitcoin. I just read that Kelly placed $50 million into gold, though. Many people thought the gold would go down when Trump won. Do you think that governments will have to bring gold back into the money system at some point? If you look at who has been buying the most gold in the last several years, it's been central banks from other countries. What makes them do that? Gold is now worth almost $3,600 per ounce, which is an all-time high. This is after it had been in a trend of consolidation for around 4 months. What do you think is causing the gold market to stay strong? And do you still think this is the beginning of this bull cycle? Yes, I believe that this cycle really just got going after that consolidation. But I suppose the legs started in 2024 when we burst through 2,000 and silently moved from 2,000 to 3,000 without anyone noticing. A lot of analysts told people to sell Newmont and Barrick when gold was at 2,000 because they thought gold had peaked and there was no room for it to go up. And I think that when Trump won, a lot of people thought the price of gold would go down because the economy would grow and Trump would do all these amazing things to make America great again and lower the deficit. But now it's clear that none of that was true. But I believe this is a new leg. People keep saying that $3,600 is startling, but the actual shock was the slow ascent from $2,000 that Wall Street scarcely noticed. At the time, analysts lowered their ratings on key companies like Newmont and Barrick, thinking that gold had reached its high. This shows how often consensus misses turning points. The break above $2,000 in 2024 was a real signal, not just noise. It represented a change in the structure. The political story about Trump cutting the deficit also hid the truth. The debt of the U.S. only got more. Investors might lose just as much money by ignoring quiet uptrends as they can by chasing frenzied highs. Next, we can look at the history of gold's first bull leg to see what can happen next. We truly invested more than 10 years. Keep in mind that the bull market started in 2001 and ended in 2011. The price of gold went from less than $300, so it went up 6 times, right? From 2011 until 2024, things truly went wrong. Gold prices ranged from $1,500. It went back to $1,000 at first, though. In 2015, it reached $1,050. So it stayed at $1,000, then climbed back up, but only temporarily reached a new high amid the COVID crisis in 2020. It soared up above $2,000, but then it got cut off and plummeted back down. But that's a big base we created around $2,000, which is now the floor since it was resistance. It was the top, now it's the help, and now we're simply starting a new leg. I suppose this one will at least be the same shape as the other one. A sideways market that lasts for 10 years is rarely a waste of effort. It lays the groundwork for the following step. The first run of gold from $300 to almost $1,900 was really fast, but the 13-year consolidation reset prices and got rid of weak hands. That long base around $2,000 is really important. What was to be the ceiling is now strong support. This is where investors need to be patient, buying into structural floors instead than trying to catch peaks. If the new leg is like the prior one, the upside isn't small. For portfolios based on actual assets, it's life-changing. Next, he explains how the calculation may lead to gold prices of $12,000. So we went from less than $300, that was a 6-fold rise in consolidation. If you think we'll move up 6 times from $2,000, that means gold will be worth $12,000. So at the very least, I think that's where we're going. But if we have a crisis with the dollar and the U.S.'s own debt, we may go far higher than that, and I believe that there's a good probability that will happen. You wanted to know what's going on. The U.S.'s monetary and fiscal policies are a mess. And actually, after the dismal jobs data we got today, the jobs market has never been this bad outside of a recession. The only 2 times the job market was as bad as it is now were during the Great Recession of 2008 when the economy was in trouble, and in 2020 when we had to shut down the whole economy because of COVID. The idea of $12,000 gold is not just a dream. If history repeats itself, it's only symmetry. But this time, the problem is a failure of systemic policy. The U.S.'s budget deficits and the Federal Reserve's actions caused a debt spiral in which fiscal and monetary measures make inflation worse instead of better. Weak job figures show that the economy is in trouble. The employment losses in June and the similarities to 2008 and 2020 show how fragile things are. Gold doesn't respond to hope, but to a lack of faith in money. If sovereign debt breaks, estimates go through the roof. Investors should think of this as a way to protect themselves, not as a way to make money. Next, the Fed's credibility issue with jobs and inflation will be the main topic. So, the Fed has been wrong about this job market. Powell continued stressing that the job market was quite strong. Our market is quite robust. He was wrong the whole time. The job market isn't very strong. In the past, miners have always followed the metal, so this change in leadership seems strange. Investor doubt kept prices low, but doubt is frequently the first sign of a huge run. Then he talks about why miners can still be too cheap even after big increases. Finally, they're starting to realize that gold isn't going to crash. But these gold stocks aren't priced for present gold prices, let alone future gold prices. At least they're priced for a fall right now. People say, okay, gold is going to stay around this level, so we need to bid up these stocks because they're still really cheap, even though they've gone up more than 90% this year. This year, gold mining companies are the best performing sector in the market, yet no one talks about them. People don't talk about them. I believe Newmont Mining is the best stock in the S&P 500, the only gold stock in the S&P 500, and it's doing better than all the tech stocks. But Newmont is undoubtedly the stock in the S&P 500 that people own the least. I want to talk about the gold mining industry and the fact that the Fed seems to be giving up on its 2% inflation target. It's not tech, AI, or biotech that does the best in 2025. It's gold miners, which are up almost 90% this year. But the mainstream media hardly talks about it, and institutions still don't own enough of it. Newmont is the only gold miner in the S&P 500, and it has done better than all of the big tech companies. However, it is still one of the least owned stocks in the index. That difference means there is an opportunity. Prices are not in line with gold's current levels, let alone the $4,000 to $5,000 ranges that are expected. This lack of ownership offers miners room to move, since even minor changes in capital from passive funds could cause big shifts. Next, the focus changes from miners to the US dollar's shocking drop in value compared to gold. But first, I want to point you that the US dollar is now worth half as much as it was 3 years ago. You have talked about how gold might one day come back into the monetary system. In some ways, it seems to be forcing itself back into its place as the best form of money. What do you think about this big and quick reduction in the value of the dollar compared to gold? And do you think that in the end, governments will have to bring gold back into the money system in some way? I believe that will happen. I believe it's quite obvious. If you look at who buys the most gold, it's been foreign central banks for the previous few years. Why are they doing that? I suspect they're getting ready to trade in their dollars for gold. I believe that central banks will start to use gold as their main reserve asset. That's going to shift the game for the US because the globe won't need our currency anymore. The US dollar has lost 50% of its value against gold in just 3 years, which is more than merely market volatility. It's a loss of trust in the system. The World Gold Council says that foreign central banks have been the biggest net importers of gold, acquiring more than 1,000 tons in 2022 and 2023 alone. That's getting ready, not guessing. If gold goes back to being used as reserve collateral, it will be difficult for the US to borrow money since fewer people want dollars. For investors, this changes what risk means. When the reserve currency itself loses value, diversification is not an option. Then he asks the hard question. What happens if people from other countries stop giving money to the US? If they don't need our money, how are we going to buy the things we need because we don't make them? And how are we going to pay off our debt? We have been relying on foreigners to pay off that debt since they have the money we don't. So it's a significant deal for the U.S., but I believe that from a financial point of view, you will see people using gold with the technology that is available today. This could be through tokenized versions of gold on a blockchain or through closed systems where the custodian has the gold and uses technology to digitally assign ownership so that people can do business, send and receive money, and make and receive payments using gold. You can use gold just like you would use PayPal, Venmo, Zelle, or any of these other services. You don't have to move your gold, without foreign buyers of its debt. America's consumption model falls apart. And the new currency might not be another fiat currency, but tokenized gold. Households in the U.S. import more than they make, which makes them dependent on the dollar. This is risky if demand for the currency drops. With blockchain and financial infrastructure, it's no longer just a hypothesis that you can buy and sell digital claims on real gold. Tokenized vault systems and Paxos Gold are two examples of projects that are already up and running. This completely skips dollar rails for investors. This means that gold is more than just a hedge. It's becoming useful money in other systems. That's a huge change that not many people are expecting. Next, we'll look at how this change in technology is connected to the Fed's receding inflation target. You realize that if I wanted to buy something from you, you'd want me to pay you a gram of gold for it, right? Anything that costs $30, $40 or more, right? I don't have to put some gold in an envelope and deliver it to you. If I have the gold in a custodian and I have it tokenized in my wallet, I can merely SMS or email you the gram. And now you own the gold instead of me. You own the gold now, not me anymore. You have it. It's in a vault. You can have them send you the gold if you want it. But why would you do that? Keep the receipt for the ownership. Now, if you want to buy something, you can pay with gold because the person who wants to sell it to you also wants gold. Why do people like gold better than dollars? Because gold keeps its worth. Wall Street wants you to believe that gold is merely a bar in a vault that doesn't move. But this paragraph informs us that it is already being changed into a digital transaction system. It's no longer just an idea that gold can be tokenized. The exchanges in Singapore and Dubai are both trying out blockchain-based gold settlement. That means that soon investors could use gold as a payment rail, competing with stable coins and currency. If more people start using it, custodial businesses and fintech companies may be able to open up new pools of liquidity, which would connect bullion with global trade. The most important question is whether or not regulators will let private digital gold systems compete with central bank digital currencies. Next, we'll see how this argument turns into a fight between gold and fiat as two different types of money. Why would I desire money when I could have gold? It's like, why utilize the post office when I can just send it via FedEx? The free market has given me a better choice than the government, right? What makes individuals choose Uber and Lyft? Because taxis cost too much. Why do taxis cost so much? The government gives out the licenses and keeps an eye on them, which is why they cost so much. The free market option is, well, I'll simply call an Uber, right? Gold is the same thing as an Uber in the money system, right? The money of the free market is gold. Fiat is money from the government, and it's bad since it loses value. The longer you keep it, the less it's worth. Gold is the opposite. The value of your gold goes up the longer you keep it. So if you had to choose, which one would you hold? Very beautifully put. Last time I had you on, you said that you still thought $100 silver is too cheap. This is the secret comparison. Fiat is like a taxi medallion. It's pricey, doesn't work well, and needs government protection. In the previous 50 years, the US dollar has lost more than 85% of its buying power, but gold has kept its worth and even gained in value over time. This text is basically saying that choosing money is like choosing Uber over cabs. But the main problem is getting people to use it. Will people and businesses really want to utilize a hard asset for everyday transactions, or will its instability and lack of infrastructure keep it from happening? It's a reminder to investors that fiat erosion isn't just a theory. it slowly eats away at salaries, pensions, and savings. The following talk about silver makes things more worse for people who are betting on hard money. We've already gone over $40, and in order to get back to the $50 high from 1980, adjusted for inflation, silver would have to be around $200 an ounce. Do you think that's a reasonable goal? And if so, please tell us how you think we could get there. It's quite real though. Example, if you had $10,000 in gold and $200 in silver, that's 50 to 1. I mean, that's quite likely to happen, and I think silver might even go up more than that, but right now it's above 41. There is actual resistance at 50, not just psychological, because there is a double top there that goes back to 1980, and then we struck it again in 2011. So silver hasn't gone up yet. Gold has gone up while silver is remaining in this area. So I do think there will be some resistance at the top, but I don't think it'll take long after silver goes above 50. Once it hits 51, 52, and 50 becomes the support, I don't think it'll take long. The news says that silver at $41 is a breakout, but in reality, it's still far from its all-time highs. That top in 1980, adjusted for inflation, is about $200 now, which means that silver is still very inexpensive compared to how it has been in the past. The $50 level is very important because it has been tested as a double top in both 1980 and 2011. And markets don't usually get past that kind of barrier without a big macro event. If gold does reach $10,000, the 50 to 1 gold to silver ratio predicts that silver prices might increase up to 3 times that amount. Investors should keep in mind that when silver goes back up to $50 and turns it into support, the technical momentum could pick up speed faster than gold itself. Next, he talks about how short covering could make that move happen quickly and in a way that isn't orderly. I think the move will come rapidly if silver goes up to 100. It might happen in a few months, because once we get rid of that resistance, there's nothing there. I also think that a lot of people who are shorting silver are going to have a hard time covering those positions and buying silver that doesn't really exist. Now let's focus on the gold and silver mining industry, which is doing much better than the metals themselves and is utterly destroying the market as a whole. You said that Newmont is one of the finest or the best companies in the S&P 500 right now. So far this year, the GDX and SL ETFs have both gone up more than 80%, yet the mainstream media hasn't said anything about it. What do you think of the opportunity and precious metals mining stocks right now? When do you think the financial media, financial advisors, and Main Street will realize that the miners are in a bull market? Listen to the quiet. Miners are doing better than any other major sector, yet the news coverage is almost non-existent. The GDX and SL ETFs are up 80% this year, which is a lot more than the S&P's single-digit returns. This should be front-page news. Newmont has done better than even the most talked-about tech stocks, but analysts aren't saying much, probably because Wall Street makes more money from pushing passive equity flows than resource shares. There is a significant risk of a silver short squeeze. Historically, registered convex inventories have been low, which means there may not be enough supply to cover positions. It seems that retail investors are always the last to know about bull markets. Next comes the missed chance in mining before Wall Street decides to sell the narrative back to you at much greater prices. You know, I enjoy that this bull market isn't on anyone's radar. I just think that Wall Street will buy into the market later at much greater prices. They don't have to get in right now. I want my clients to come in now, and you know, the less competition there is, the better. I just want to buy as many stocks in gold and silver mining companies as I can. And the last thing I want is for Merrill Lynch and Goldman Sachs to tell all of their clients to purchase. Right? That's going to cost my clients extra money. As far as I'm concerned, the longer they ignore this bull market, the better. As if I'm not in a rush. I waited a long time for this, and I don't want to speed things up right now. But I see that as a good sign that no one is interested. People don't know. A sector rise that goes unreported is generally where the strongest risk-adjusted returns are. Gold miners have gained more than 80% this year, but traditionally, there hasn't been much money flowing into the sector. The most recent poll from Bank of America shows that institutions still have too much tech and Not enough commodities. That gap means that smart money can still buy up shares before analysts raise their coverage and ETF inflows change prices. This stealth period gives ordinary investors leverage without the high prices that come with hype. The problem is that most people only realize it when CNBC runs the headlines, which is usually too late. Next, he compares this quiet rally to Bitcoin's declining power. There are still some people who are obsessed with Bitcoin and are buying it instead of gold. I just read that Bukele put $50 million into gold. Maybe he's starting to realize that Bitcoin isn't the best choice. But you know what's interesting? Bitcoin is only slightly up today. Bitcoin is also more than 15% lower than its all-time high price in gold from 2021. So even though there is a lot of buzz about Bitcoin, it has been losing value compared to gold for the past 4 years. All the ETFs that were created, the NFTs, the Super Bowl commercials, the endorsements from famous people, Donald Trump, and the strategic Bitcoin reserve, the Bitcoin czar, and making Bitcoin the capital of the globe, right? All that hype, and they still can't get Bitcoin to go up. So what does that mean for you? But gold is the one thing that isn't getting any attention, even if it is rising up. Bitcoin has done worse than gold for 4 years in a row, even though billions have been spent on marketing and ETFs. Bloomberg data reveals that the price of Bitcoin in gold is still 15% lower than it was at its highest point in 2021, even though U.S. spot ETFs were approved in January. That disparity goes against the story that Wall Street told institutions about digital gold while they discreetly bought real gold themselves. Celebrity advertising and Super Bowl ads got retail investors excited, but the performance hasn't lived up to the expectations. Gold, on the other hand, has been going up without any help from the media. Next, he talks about silver's important but trailing role, and now silver is going up too, but not to record levels. I still think these gold stocks are very inexpensive. They could double again from here, and I don't believe it would be too much money, especially since gold stocks are going to be a lot higher if they double from here. So it's like they still wouldn't have caught up to where they should be. We still have a long way to go with the mining stocks. In fact, I made some of the men who shift gold mad in April of this year when I put out a report saying that the best method to buy gold was to buy gold mining stocks. And I told my clients not to buy gold for the first time. Gold was about 3,200 to 3,300. I told them, look, I'm a gold bull, and I love gold, but these gold stocks are so cheap that it doesn't make sense to buy gold above ground. When miners sell their goods at big discounts, even when metal prices go up, investors can take advantage of this fundamental mispricing. In the past, during gold bull markets like 2001 to 2011, miners typically made twice as much money as the metal, since they could operate at higher prices. Even if gold is close to $3,300 today, valuation metrics like price to cash flow for the biggest miners are still 30 to 40% lower than their 10-year norms. That means there is room for a big re-rating as earnings catch up. What's the risk? These stocks are still cyclical and unpredictable, and they can change by as much as 20% based on how people feel about them. However, if you don't pay attention to them at all, you might miss the sector's biggest upside. Next, he talks about why it's better to possess metal in the ground than to buy it above ground. It's so inexpensive that you should just buy it while it's still in the ground. And even though gold stayed the same for months, gold stocks were going up, and it's clear that they're not as cheap as they used to be, but they're still extremely inexpensive. I still think individuals should buy gold stocks, gold, and actual silver, as well as any silver mining stock. So, my gold company is Schiff Gold. Don't do what you want. Sadly, there are a lot of crooks in the gold business, and they cheat their customers by selling them bogus numismatics, proof sets, and other coins with strange weights that you've never heard of. They do this because the prices are 30%, 40%, 50%, or more. You need to raise the price of gold by 50% just to break even. So why buy gold at 3,600 when you need 5,000 to break even? So, at Schiff Gold, we're adding 1% to the price of gold. You can sell gold back today and make money, right? You don't want to get scammed then. Most investors don't know that the gold sector itself might be a bigger trap than the ups and downs of the market. Proof and numismatic coins sometimes have 30% to 50% markups, which means that if you buy one for $3,600, you need gold to be worth $5,000 to break even. The FTC has warned about these kinds of things, but many dealers do well by taking advantage of customers who don't know what they're doing instead of being honest about prices. In contrast, trustworthy bullion companies usually charge 1% to 2%, which makes it easy to get cash right away. The message is plain for regular investors. The kind of gold you own is just as important as how much you paid for it.